A very good evening to you. So as we've been saying, the problem here is two-pronged. One is the impact of coronavirus and the spread thereof, and the other is the situation, the oil situation at the moment. Let's start with corona first and look at just what the impact of that is at the moment. It's been going on for weeks, but where are we now?
Well, absolutely. There are huge concerns now with the WHO essentially saying that there's a very real possibility of a global pandemic. There's real concerns about what this means for markets around the world. Here in the United States, we've already heard from Goldman Sachs and their analysts that have come out, and they've essentially said that they expect to see US companies see zero growth this year because of the impact that COVID-19, this coronavirus, is going to have up and down the supply chain. We've already seen major multinational companies like Apple, Microsoft, Nike already say they're not going to hit their quarterly earnings forecast. Of course, recently we've seen analysis come out from the International Air Transport Association that they believe that the airline sector itself could see between 63 to 113 billion dollars wiped off this industry over the spring and early summer alone. So that just shows the huge ramifications that COVID-19 is already having on global markets, and there are real fears of a global recession that could be triggered by it.
All right, and then comes the oil situation that has happened, and Saudi Arabia and Russia now in a little bit of a tiff. What happened there, and how's that thrown things even more?
Yeah, there are real concerns. Of course, the message from OPEC and the likes of Saudi Arabia is that they want to see a cut in production because they expect to see a huge drop in demand for oil, largely due to this coronavirus. However, they failed to reach an agreement with Russia, and over the weekend we saw Saudi Arabia essentially say that they're going to increase oil production. Now that might seem counterproductive to their initial wants, but they believe, and analysts believe, that that is a clear tactic to try and get Moscow back to the negotiating table. What we have seen is Brent Crude fall around 20%, now trading close to around $36 per barrel. Goldman Sachs here in the US believe that this global oil price war could see Brent crude prices drop to as low potentially as $20 per barrel. Now, we have heard from US President Donald Trump. He's first of all tried to appeal for calm from global investors, especially for the markets here in the US, describing the COVID-19 hysteria that some might describe it as fake news. Well, essentially it's the fake news trying to drum up hysteria, but of course that not having much of an impact on investors, really incredibly worried about the impacts this could have up and down global supply chains, especially with these latest remarks coming from the WHO. The president also saying that this is purely a spat between Saudi Arabia and Russia and could in fact be good for consumers. Of course, lower oil prices means cheaper petrol at the pumps.
Well, we can only hope that that will be the outcome at the end of that, and with not too much carnage in between, William. So, I mean, what are the experts saying? I mean, what do we need to do to cope with the impact of both of these situations now on global economies?
Well, there are real concerns, and essentially there are strong messages coming out calling for central banks around the world to try and do more, to try and boost spending in their nations. Of course, we've already seen the US, we've seen the Federal Reserve in the last week or so take the very unusual steps of moving outside their regular scheduled meetings to cut interest rates by 0.5%. They're now scheduled to have a meeting next week where analysts and investors here on Wall Street already pricing in the chances of them again cutting interest rates to try and give the US economy a boost. That's something that the White House very much wants to see happen, and something that we can likely see other nations around the world taking similar steps to try and boost sentiment and try and kickstart consumer spending. And while there might be huge impacts for supply chains for companies, of course, here in the US, consumer spending is the biggest driver of the US economy. It counts around for 2/3 of the economy here. So the message from central banks and the likes of the Trump administration is that if they can secure consumer spending and try and generate a bit of positivity when it comes to the consumer sector, that could help stave off some of those concerns. But analysts really bracing for what could be the potential of a global recession due to the COVID-19 outbreak.
All right, well, we'll continue to keep an eye on the situation. Thank you so much, William Denslow, just to bring us up to speed on both these situations affecting that's coronavirus and the Saudi Arabia and Russia and their oil dispute, and just the impact of that. We'll continue to watch that for you.